Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. So let's look for decent trading occasions on the market. Let's look for decent trading setups. First, before we start, well, we have to look on the calendar. So let me show you the calendar from today. You go on our website alpari.com, Forex analysis, Forex economic calendar. Have to wait a little bit. So this is the calendar for Thursday. We already had PMIs from Eurozone, from Germany, the biggest economy, and Eurozone. From Eurozone itself, the data came slightly worse than expectations, but still above 50. Still, it looks not so bad. Apart from that, today we'll have trade balance data from US, from Canada, speech from FOMC member Bostich, and that's pretty much it. So today is the PMI's day, and most of them were already published. Tomorrow non-farm payrolls data from the job market from Canada. So definitely that will be important day for the American dollar to Canadian dollar. So for the popular loonie. But the calendar is rather empty, and I'm enjoying this situation that the market is moving very technically. So let's start. We can start with euro to Canadian dollar. That is a very, very good setup. And luckily, well, I do have this position on my live trading account. I was also telling about this pattern, about this situation for a long time on daily analytical reports, on trading snipers, and written analysis. So we do have a nice upswing. There was an uptrend line here, which was connecting higher lows since the middle of January. And then the price created this head and shoulder pattern, left shoulder, head and right shoulder. So we broke the uptrend line, we broke the neckline of this formation. That's one breakout, another breakout. Then we broke also the horizontal support. The horizontal support here, let's say, very wide area. After this, we got a strong drop because many traders were expecting this. And so I bet that in this place we had many sell orders. After that, the price almost tested, because the demand was too weak. So the price almost tested the recent support as resistance. The price did not go any higher. We bounced and we made new lows, the lowest levels in March. So that is pretty significant. That is a very strong sell signal. Here we got a sell signal. Here we got a confirmation of the sell signal. And now, if we have sell signal, we need to think about the potential target. And I don't see any better potential target than the horizontal support here, along with the long-term uptrend line. Price getting here would be absolutely amazing. And that would be very, very nice technical setup that I would love to see. Well, as I said, I do have this position, so it's already protected. It's already on break-even point. I think that, let me see, I sold somewhere here. My stop loss is already on my stop loss is already here, so on like 200 euros profit, and I already have my take profit here. I don't usually have take profits, but this target looks so tempting and looks pretty strong that I don't think that will go be lower. So I will love to close my position here, and that would be like 3,000, more than 3,000 euros profit. Yes, that's a very technical setup. Very, very good from the technical point of view. Everything works here perfectly, so I'm looking forward for it to work out. Next one is American dollar to Canadian dollar. And here, actually, I want to check the Fibos. Okay, that's nice. And here we also created the head and shoulder pattern. We also broke the uptrend line. We also broke the neckline. But the thing is that here the sellers were a bit weaker. So the price, I'll show you a bit closer. The price broke the neckline, tested it, then tested it again, and the price came back above. So this could have been a false breakout pattern, and many traders were worried if somebody had a stop loss too tight, it was taken here. But I spotted this resistance here, and stop loss here would be a nice idea. Not here, but here. If someone had a stop loss here, survived. If here, not so much. So there was a bit of worry that there would be a false breakout pattern. So let me show you those two setups again. So here, euro to Canadian dollar, the comeback was very weak and didn't even reach, to be honest with you, the resistance. American dollar to Canadian dollar, there was a comeback as well, which went beyond the resistance, which broke the resistance, which created an opportunity for a false breakout. But eventually the price went lower. That is why it's very important to place your stop loss orders correctly. They cannot be too tight, they cannot be too wide. It can be demanding, but yeah, it's how it is. It's how it is. Now, well, to wrap the things up, the trend is bearish. We do have a sell signal on American dollar to Canadian dollar, and the potential target for this can be here on this line. So that is a very good trade in terms of the risk to reward ratio. Now New Zealand dollar to American dollar, there is an uptrend and there is a horizontal trend. There is a sell signal created here, head and shoulder formation, left shoulder, head and right shoulder, breakout of the neckline, and also breakout of the 38.2. But what happened is that was a false breakout. So that could have been a false breakout on American dollar to Canadian dollar, but on New Zealand dollar to Canadian dollar, American dollar, it was a false breakout. False breakout usually result in the strong movement in the opposite direction. So we have a false breakout and a strong reversal. Then the price breaks midterm downtrend line, there is a breakout, comes back above 23.6, which actually triggers us a strong buy signal on New Zealand dollar to American dollar. And the current target are yearly highs on 0.7430. These are yearly highs for this instrument. I unfortunately have a problem with establishing a good stop loss order. Here is a bit too low. I think that, oh, sorry, not this one. This one, obviously. Stop loss here may be too tight. Stop loss here may be alright. So let's check the risk to reward ratio. Stop loss 45 pips, take profit 150. Trade 1, that is desirable risk to reward ratio, it looks good. American dollar to euro to British pound. After the breakout of this uptrend line, as we said, there is a sell signal and it's on. We are close to the weekly lows, we are close to the long-term lows, and we do have high chances of testing those lows again. Here is a horizontal resistance, here is a horizontal resistance, here is a horizontal resistance, here is a support. Now British pound to American dollar is having this kind of, I have too many colors here, this sideways trend. Maybe I can remove this uptrend line because we need to adjust this to the current situation. So we do have this wedge. Yes, wedge here. We are still below the neckline of this formation. We are in a wedge which is promoting further downswing because it's a trend continuation pattern and it was started after a downswing. So we should see, eventually we should see the price breaking the lower line of the wedge and aiming the horizontal support here. That is our view on cable. New Zealand dollar to Canadian dollar. Well, I was thinking about the buy signal here, and it was a legitimate buy signal. Why? Well, first of all, look at that. Okay, this is more accurate. Look at that. There was an uptrend line. This line got defended at the end of the day. We got a horizontal support, which was in the same time a neckline of this head and shoulder formation. Sellers did not manage to break the neckline, so that was just a wasted opportunity, and the price broke the upper line of the wedge here, this red line. So denying head and shoulder formation, defending uptrend line, and breaking the upper line of the wedge here triggers a strong buy signal. That is a strong, legitimate technical buy signal. But the thing is that the price is not following this, unfortunately. Well, what can we do with that? Nothing. That's why every trade should have stop loss order to avoid losses, even when you have like the best trading setup possible. Next one, Australian dollar to Japanese yen. We had this head and shoulder, inverse head and shoulder formation. At the end, it didn't work out. What we had finally was a symmetric triangle pattern. We broke the upper line, we defended this upper line as a support, and the price went higher. Also, it seems like this horizontal support is defended. Well, on a daily chart, we do have this inverse head and shoulder formation. So that is a legitimate buy signal for the Australian dollar to Japanese yen. That is a very, very good buy signal, actually. So maybe I will think about opening a long position here. That is a good buy signal. Yes, definitely. As good as here on Canadian dollar to Japanese yen, which we also said yesterday. Yes, that is very nice. Inverse head and shoulder formation on a horizontal support, left shoulder head and right shoulder, breakout of the neckline, price is aiming higher. Everything looks perfectly, especially like breakout of the resistance here, the neckline and the horizontal one. Then we test this resistance as a support. That's a full, legitimate, beautiful, technical buy signal on Canadian dollar to Japanese yen. So those two instruments have beautiful buy signals. Cable to British pound to Japanese yen. We said that as long as we stay above the green area, there is no sell signal. That's why the sell signal is below. And as long as we stay below the upper green area, there is no buy signal. So that's why buy signal is above. So for the trade here, we need to wait for the breakout, either of the upper line or the lower line of this, of those patterns. So far, no trading signal, but we are very close for triggering one. Here is a reason, euro dollar, here is a reason why euro CAD was dropping faster than American dollar to Canadian dollar, because American dollar is stronger against euro, euro is weaker against dollar. So the drop on euro CAD was stronger, the drop on American dollar to Canadian dollar was smaller. But at the end of the day, Canadian dollar is one of the strongest currencies at the moment. Anyway, American dollar, euro dollar, I'm sorry, broke the midterm uptrend line, broke the horizontal support, and is now testing the long-term uptrend line. The uptrend line which is with us since April 2017, so a year from now. This is obviously a good occasion to buy, but I wouldn't be a fan of that. I think that the price even can break this line, nothing will happen. We can test this support or this support, and I would buy only on this support on 23.6. Obviously, after the price would create a reversal pattern. Swiss franc to Japanese yen. Here is a symmetric triangle. We are waiting either for the breakout of the upper line of this formation or the lower line of this formation. That's a boring sideways trend, but boring but still promising, because eventually we need to see a breakout. And this breakout can potentially be strong, directional, and bring us many pips. So keep eye on the Swiss franc to Japanese yen. Australian dollar to American dollar. Well, situation is pretty clear here, but unfortunately I don't see a strong signal. But if I had to bet, I would go short. Why? Well, luckily I don't have to bet. So I have this freedom to open only the best setups which I love and feel. Luckily I don't have to bet. There's a downtrend here, channel down formation. There is a technical pattern, pennant, bearish flag. So this is a flag. Flag should continue with a drop. We are below the resistance. So everything looks negative. New Zealand dollar to Japanese yen, very, very good setup. Also defense of the horizontal support. So Japanese yen is giving really, really good trading setups at the moment on many instruments. Left shoulder head and right shoulder, breakout of the horizontal support, breakout of the trend line. And we placed that checkpoint to show you a good buying opportunity. So and we did that on our previous daily analytical reports and trading snipers. So you should know that, you should remember that. And hopefully you were able to use this, you were able to trade this, you were able to gain some pips from this. American dollar to Swiss franc. Here is let's say denial of this wedge formation. Wedge in a downtrend was promoting the breakout of the lower line of the lower line of the wedge, not the upper line of the wedge. The thing is, that is why you wait, or you always wait for the breakout in those formations, because yeah, obviously it could result here with a bounce and a drop, but breakout of the lower line of this formation gives stronger signal than bounce from the upper line of this formation, because bounce does not end the this formation. This formation can continue higher and higher and higher, but in theory breakout of the lower line does. Breakout of the lower line of this formation does end this uptrend line. Here's a sideways trend, American dollar to Danish crown. Still waiting for the breakout. Here is an American dollar to Singaporean dollar. Horizontal support, dynamic resistance. Here a flag. We are waiting for the breakout of the lower line of the flag and test of this support again. Thing is that we have this horizontal support that also can be considered as a descending triangle. So as you can see, every single bounce from this support is smaller. What it shows us? Well, we have bounce like that, bounce like that, bounce like that, bounce like that. It shows us that the selling pressure rises and there are more and more sellers, less and less buyers. So eventually they should give up and let the price go, and we should see just a drop. British pound to New Zealand dollar. We do have a flag which failed, and again that is why you don't, in a flag you don't trade the bounces from the lower line of the flag, but you trade the breakouts of the upper line of the flag. Okay, here. So because it also the flag could continue like that, like that, like that, it will be still a bullish flag but without a buy signal, so you would end up losing money. In a flag you trade, in the bullish flag you trade the breakout of the upper line of this flag. And this is gold. Gold reversed, then came back. Well, trade wars, trade wars. Unfortunately for the gold buyers, we do have this support, which is broken. Well, that's how it is. Yesterday we were about to test this line. It was very positive, but now it's quite the opposite. But the thing is that for the long-term traders, those movements do not count much, because for the long-term traders, we are still locked in a sideways trend between 1,360, let's say $60 per ounce, and a horizontal support on $1,307 per ounce. Breakout of the lower line, lower area triggers a sell signal, breakout of the upper area triggers a buy signal. Bitcoin, yes, 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 yes. Drop. Well, was that expected? Yes, very much. Situation is dangerous for the buyers. We broke the uptrend line here. We had a positive sentiment in the first few days, which evaporated, and now we're on a good way to test $6,000 for one Bitcoin. Oil is ready for reversal. That was a good call by Roberto, our CEO, on the lunch, media lunch in Malaysia. He said exactly here that the price of the oil should go down in the midterm. That is what's happening. Yesterday we got a reversal. Reversal is happening on a trend line. A reversal is shaped like a hammer pin bar. This is a bullish pattern. Bullish pattern on an uptrend line is a buy signal. Simple as that. So there is a legitimate buy signal on oil. On DAX defended 11,900 points, so far so good. Left shoulder head and right shoulder is emerging on the chart. Actually, it's a triple bottom formation. In case of a DAX, price coming back above here cancels the recession and opens as a way towards new highs. FTSE canceled the sell signal. There was a sell signal from the flag, and that was a very, very technical drop, correction, drop, test as a recent of the recent support as a newest resistance, bearish pattern, that's a flag, breakout of the lower line of the flag triggers a sell signal. That is a false breakout. False breakout itself is a strong signal to open a trade position in the opposite direction. That's what's happening. Boom, upswing. And now the price is climbing back above a very important resistance, which is 7,100 points. Once we will close a day above 7,100 points, we will have a legitimate strong buy signal on FTSE. And S&P 500, last but not least, defended 2,500 points, 2,550 points, performed a reversal, strong reversal. Optimism is back on stocks. So yesterday we were very negative on stocks, but the end of the session created a positive sentiment thanks to Americans. So the sell signal is denied. So or not denied, maybe delayed. It is not denied yet. Sell signal will be denied in case of S&P 500 if we will break this black line. And in case of DAX, if we will break this orange line, then sell signal will be denied. Now it's a bit delayed. So as you can see, we do have nice trading signals which are up and running. Well, what can we do? Just trade, and let's make some money on this market. Thank you very much for attending this daily analytical report. In the meantime, remember to follow us on Twitter account, Facebook, YouTube channel, and visit our website alpari.news for the latest infos, analysis. I wish you a very good day, and we see each other in half an hour on our webinar about the technical analysis, and I hope you all will be there. Thanks very much and goodbye.